to today's webinar on GSTR 9 and 9C preparation. Myself, Venugopal, Chartered Accountant practicing since 2002. I've been handling GST and automations in GST. I'm very happy to state that successfully month on month we are doing this session on GST and technology. I see some of the participants who are attending regularly here. Very glad to see you all again. And some of the participants and new participants we have. And just to share for everyone, it is our continuous endeavor to enhance the knowledge of the finance professional. Twofold, GST, ever changing with the notification. Again, new law, new interpretation, multiple advanced rulings, multiple views. So it's mandatory that we should get updated. Point number two, we are all finance professionals. So we constantly deal with data, which is finance data. And most of us use Microsoft Excel as one base. And day in, day out, we use that either for preparing some management reports or some written filing or some reconciliation. It is also important, along with the knowledge, we should sharpen our tools in terms of working with the data. So in that context, every month in our session, we have two sessions. First part of the session, we look at some knowledge updates. Second part of the session, we look at the technical updates. Some of you who have missed our sessions, you can reach back to Stephen, who can share you some of the earlier videos. With this note, let me also introduce my colleagues, Ashika Agarwal and Jagadeesh. Welcome both. They will be taking the first half of the session, which is on GSTR 9 and 9C. In the first half of the session, we would look at what this form annual return is. And I'm sure most of you would have filed your annual return by now. At least this 5 years journey of GST, 3-4 annual returns would have got filed for yours, for others. Fairly everyone have an idea of what annual return is. However, it's our duty to again brief you what the annual return is, what the data that should get in. Our team would also walk you through some of the examples as to how you have to fill the form. Every time I repeat this in the session, whenever the session is happening, in your own good, in your own interest, have your ready reference materials. Given that we are doing the GSTR 9 session, keep a blank form of GSTR 9, because as a passing remark, I may use various table numbers. It's good if you have the form in front of you and you are aware of the table number. Point number two, you are here to attend, learn, get something clarified. However complicated the question is, or however the simple the question is, feel free to ask your question. Put your question in the chat. We are open. We are here to address your queries to the best of our knowledge. If something we couldn't resolve at this point, definitely we'll come back to you. So do not hesitate in asking the question. As the session begins, you will be muted. You can put your questions in the chat. At an appropriate time, we'll keep unmuting so that you can also ask your question. Yeah. So on this note, let us begin the session. So I request Jagadeesh and Ashika to start out.
Okay, sir. Let me share my screen, sir.
Yeah.
Okay. Agenda of today's session is understanding of tables in GSTR 9 and understanding its context. And later we'll discuss on issues in outward and inward reporting. And then at the end, we'll take some examples and we'll discuss. And after that, we'll see the tables in 9C and how to report in the 9C and how 9 figures will link to the 9C that we'll see. And at the end, we'll see the controls and the best practices. See, annual return. So every person is required to file the annual return. Section 44 requires every registered person is required to file the annual return. Other than input service distributor, casual taxable person, non-resident taxable person, and the person paying tax under section 51 and 52, that is TDS and TCS. So every registered person is required to file the annual return along with the self-certified reconciliation statement. This is nothing but the GSTR 9C. Earlier, the statement is required to certified by the chartered accountant. Now, that requirement is done away. So, that reconciliation statement along with the audited financial statement in such form and manner. What is such form and manner? For a regular taxpayer, GSTR 9 is a form, and for the compensation taxpayer, it's 9A. So, as section 44 mentioned, every registered person is required to file the annual return. Either any exemption for any taxpayer. On plain reading of the Act, there is no such exemption, but by virtue of the notification, where notifications, certain options have been given to the taxpayers based on the turnover. So let's see what all the options given to file the annual return. So the taxpayers whose aggregate turnover not exceeding 2 crore is not required to file the both 9 and 9C. Option to file. It's just an option. They want to file, they can. And the taxpayers whose turnover is more than 2 crore but not exceeding 5 crore. GSTR 9 is mandatory, but 9 is optional. And the taxpayer whose aggregate turnover exceeding 5 crore, both 9 and 9C is mandatory. So this is just an option. If they want to file even though they are not below the 5 crore or 2 crore, if they want to file the 9C, they can. If they feel,
Jagadeesh, for a moment. Yeah. So again, participants, there are a couple of points which I want to mention. Firstly, the definition of turnover. It is 2 subsection 6, which talks about aggregate turnover. What the 2 crores, 5 crores, which Jagadeesh is mentioned, it has to be seen at the PAN level. That means each GST, and let's say I have 3 GST numbers, each GST number is 2 crores, 2 crores, 2 crores, which is 6 crores has to be recognized as the applicability of GSTR 9 and 9C. Since your aggregate turnover crossed 5 crores, all the 3 GST returns you have to file 9C. And the biggest mistake people do is, I have opened some new offices, new branches, GST number is there, no turnover, I will not file. I will fit under less than the 2 crores, I will not file. So this is the common notices which we have seen during the GST audit, that they have not filed their GSTR 9 and 9C considering their limit is less than 2 crores or 5 crores. Because they are only looking at a GST number, but you have to see at a PAN level. Point number 2, this return filing, even though it is optional, it means if you want, you can file. Even though it is optional, you can still file. So this portal doesn't prohibit you in not filing it. Do I recommend you to file? My choice, always. Even let's say your turnover is only just some 75 lakhs. I would still suggest you should go ahead and file your 9 and 9C if you have any corrections that are there to be done. Contextually, if I have to say, consider this as your last opportunity to correct whatever which you need to correct and which you need to file, right? So this is your last opportunity to file your corrections. So make sure that you correct the returns through your GSTR 9 and 9. What errors could have happened? Don't worry, with the host of errors that you could have made, we are going to see that. Please continue.
To this, one more thing, like if a person who is optional to file, if he files the return, though belatedly, the question arises whether late fee will be payable or not.
Yeah, this is another interesting question. The applicability of late fee for GSTR 9 and 9C. The late fee is discussed in section 46, and you don't file the return sometime, you get like 3B is one return, you get one notice in 3A. 3A, you will get it for all the returns you are not filing on time. The returns you are not filing on time, you will get the notice for sure, late fee is applicable. But the question is, will the late fee be applicable for an optional return? Return itself is not mandatory to be filed, but I am filing it late. Will the late fee be applicable? Answer is yes. Whenever you are filing it, it will be applicable. Why should it be made applicable? We have a notification. The notification states that if you don't file the return, and return is not applicable if you don't file the return, it is deemed that you have filed your return. So whatever the data which are populated, by the way, if once you go to the portal in the second half, I'll walk you through the demo. Some numbers are auto-filled, and basis your R1 3B, it gets auto-filled. So that will be deemed as the final number, and it will be deeming that you have filed the GSTR 9 with some numbers, and that would be used by the department officer for assessment. So point back again, optional can be filed, even if it is filed late, even optional return, the late fee would be applicable.
Okay, if you want to correct the error also, then it is recommended to file the 996. Let's take an example. If you put 2 zeros extra in GSTR 1. Sir, you are in here.
Nothing, please continue.
Okay, sir. Okay. If you put 2 zeros extra in GSTR 1. So if you want to correct it, if you have not amended that one, it will take, instead of 1 lakh, it will take 1 crore. So you want to correct that figure. So it is recommended to correct it in the annual return, that is GSTR 9. So in order to avoid the future litigation, that's what Venu sir and Ashika tried to explain. So let's move on to the next slide. So let me give you a glimpse of GSTR 9. So GSTR 9 is divided into total 6 parts. That is from part 1 to part 6. We'll see each part first. Part 1, which talks about the basic info about the SEC. This will give the GSTN number, trade name or legal name, and the period of filing. Coming to the part 2, which talks about the liability. Liability is further part 2 further divided into 2 parts. That is table 4 and table 5. In table 4, we are required to report the turnover on which taxes is required to pay, and the table 5, turnover on which taxes is not payable. So this is all about the table 4 and 5 is all about the turnovers. Coming to the part 3, input tax credit. You will have total 3 tables: table 6, table 7, and table 8. In table 6, we are required to report the gross input tax credit avail, and in the table 7, input tax credit reverse. And table 6 minus 7 is my net ITC. That is will come in the table 7J, which will flow to the GSTR 9C of table 12 of GSTR 9C. So coming to the table 8, in table 8, it is an informational table which requires which provides the reconciliation between the GSTR 2A and the input tax credit avail. So after this liability and input tax credit, obviously the next part is the net taxes paid. So part 4 is all about the tax paid details. What are the taxes that is payable and paid? That summary will require to provide in the GSTR 9. And ideally, GSTR 9 would close between the part 1 and part 4 if everything goes good. But if any errors or if any adjustments pertaining to the 21-22 has made in subsequent year, that is in 22-23 up to the November 30. So such adjustments which have been made in the 3B from April to November that are required to be reported in the table 10, 11, 12, and 14. That is the part 5. All the adjustments are required to disclose in this. So table 10 and 11 is for the turnover, that is the liability part, and 13 and 14 is for the input tax credit. In table 10, the supplies on which tax has been paid in the subsequent year, that is from April to November, is required to report in the table 10, and the supplies on which tax is reduced is required to report in table 11, and table 13 is for input tax credit, which is reversed in the subsequent year, that is required to report in 13, and 14 is the current year input tax credit availed in the subsequent year, that is up to November 30. That is required to report in the table 14. Now coming to the part 6, other information. Government is expecting some additional information. All that information we need to give in table 15 to 19. That is about outward HSN, inward HSN, and the demand, if any demand is there, and what the and about the refund claim details. All those details we need to give from table 15 to 19. Except table 18, that is the outward HSN details. Remaining all tables are optional for the period for this 21-22.
I just
So, sorry, sir.
yes, again, it is at the cost of repetition. Again, it is a very beautifully drafted form. Forget part 1, it's a 6 parts. Part 2 is a liability. Whatever is your liability, whether it is outward or inward, has to be recorded in part 2. And the sum and essence of the GSTR 9 annual return is whether have you discharged the right taxes or not. The tax liability is, if you have to take, it is gross liability minus ITC is net tax paid. So that is where you can see part 2, part 3, part 4, which is serially drafted: liability, input tax credit, and tax paid. Ideally, the form should have got closed between these 3 parts, part 2, 3, 4. But we all know that GSTR 3B is a static form. GSTR 1 also is a static. Once you file, you cannot edit it. So you might have paid the taxes in the subsequent period. So whatever those adjustments which you have done in the subsequent period is dealt in part 5. And that is going to be the crucial to determine how you have discharged the taxes. Government wanted other information, so it is in part 6. So broadly understand the structure, how the annual return is, and how the data that needs to get into, will be seeing it. Please continue.
Yeah. Coming to the supply, from where supply has to be picked up. Supply can be anywhere. It can be on the credit side of the P&L account, or debit side of the P&L account, or asset side of the balance sheet, or on the liability side of the balance sheet, or nowhere in the financial statement we can find it out. We all know the credit side of the P&L account. So what could be the debit side of the P&L account? Any income that I have created to the expense ledger, that could be the part of the supply, and that we have to carve out from the P&L and had to be added to the supply for the purpose of the GSTR 9. And what could be the supply in the asset side of the balance sheet? Maybe the sale of the capital asset, that could be the part of the supply. And liability side of the balance sheet. Advances. As we all know that we need to discharge liability on advances received, but there is an exemption for advances received against the goods. For services, we need to discharge the liability. For the goods, we are not required to discharge liability on the advances. So what's that in the outside financial statements? Maybe the Schedule 1 transactions. Classic example is in cross-sells. So if I send goods from Karnataka to Andhra Pradesh, under GST Act, it is a supply. But in financials, we may not find the turnover. In case of consolidated financial statements, the turnover will get netted off and will not be shown in the financial statements. But for the purpose of the GSTR 9, we have to consider that as a supply and form part of the turnover in the GSTR 9. So this is the bird eye view of the GSTR 9. We'll see how the data flow to the GSTR 9 and how to report the turnover, liability, input tax credit, in GSTR 9. So turnover, as I earlier said, turnover part is split into two parts. The turnover on which tax is payable is required to report in the table 4, and the turnover on which tax is not payable is required to report in table 5. And table 10 and table 11. The adjustments which have been made in the subsequent year required to report in table 10 and 11. So coming to the tax liability, as earlier, table 5, it don't have any tax implication. So tax liability is nothing but table 4 plus table 10 minus table 11. Table 10 is tax is discharged in subsequent year, and tax as reduced in subsequent year will be reported in the table 11. So ideally, table 4 plus 10 minus 11 is my liability for that period. Coming to the total tax payment, whatever the liability we declared in table 4 will flow to the table 9, and whatever the liability I declared in table 10 and 11 will flow to the table 14. So total tax payment is nothing but table 9 plus table 14. Now coming to the input tax credit. So table 6, which is my gross input tax credit, and table 7, which is the input tax credit reverse for that period. So net ITC is table 6 minus 7. Table 7 is my net ITC. So outward summary. Now let's see how to report the turnover in the GSTR 9. So the taxes which have been paid in the 3B up to March 2022 is required to report in the table 4, and the turnover on which taxes have been paid after March 22 till November 2022 is required to report in the table 10 and 11. And if any tax is payable, balance tax payable paid through the DRC 03 is again added to the table 4. So whatever the turnover on which taxes have been paid only form part of the GSTR 9. So additional liability. If any liability which is paid after November 30, let's say I am having liability in the March 2022, but have not discharged in March 2022. And this I have identified it in the December 5th. So now I'm paying. Now I have to pay the liability. Can I pay? Can I adjust through GSTR 3B? No, you can't adjust through GSTR 3B after November 30. Mandatorily, you have to discharge that liability through DRC 03 only, and the DRC 03 should be only paid in the cash. Why only cash? Why not? Why not with input tax credit? Because at the time of filing DRC 03, you may have the credit ledger balance in your ECL, but during liability time, which you supposed to pay, that is in the March 22, you might not have a credit balance in your credit ledger. If you set off with the input tax credit, it will tantamount to the past credits, past liability is set off with the future credits. You should not be done. So you should always remember this. You should never set off past liability with the future credits. Do you want to add anything, sir?
Nothing. We'll see as the examples come up. We will see.
Okay.
Yeah. Okay. Ashika would like to add.
Okay.
In this slide, if you will notice, first, Jagadeesh has taken you through what details we need to furnish. Table 4 and table 5, which deals with outward taxable supplies. Table 6 and 7, which deals with ITC. Now with that, there comes a table 10, 11, 12, 13, which deals with the subsequent year adjustment. Means 21, 22 data or rectification, omission, correction, which you have carried out till your next financial year. Now the next financial year, if you will see, Jagadeesh has not referred September. If you all remember, earlier it was September was the due date or deadline for doing the rectification and omission, now which has become 30th November. The participant who has attended our last session would remember the importance of this 30th November. by 30th November, the government has given us an extended time. You still have time because GSTR 3B is still pending to be filed. 20th November is the last to file. That is the last day to do the correction. So still, if any ITC, any tax you have short paid, you still have a time to declare that and rectify it. Though GSTR 1 date has gone, now you can't do any rectification in GSTR 1, but tax liability plus ITC availment you can still do because 20th November 3B due date is still there. So it's very important if, as we all know, audit has completed. With the completion of stat audit and tax audit, now we know what we missed out, either in case of outward tax liability or in case of ITC. So this is your last chance to do all the corrections to make sure that while filing your GSTR 9 and 9C, everything is taken care of. This is the what I want to add. Jagadeesh, you can continue.
Okay. So these are all small changes that have been changes in GSTR 9 for 21-22 compared to the last year. So as I discussed earlier, table 4 is for the taxable supplies on which tax is required to pay. So earlier there is an option to show outward supply netted off with credit or debit notes. But from now onwards, from 21-22 onwards, we have to disclose the credit notes and debit notes separately. That is from the table 4I to 4L. So from 4B to 4E, you are required to declare the gross figures. And if any credit notes or amendments that you are required to disclose separately, that is from the 4I to 4L. So we'll see what is 4B, 4E, and 4I to 4L. And the next slide, I will discuss about that. And coming to the table 5. Earlier in table 5, there is an option to disclose exempted, nil rated, and non-GST supplies in the exempted row itself. But from 21-22 onwards, non-GST supplies are required to be reported separately, and exempted and nil rated, you can club and declare it in the exempted row itself. To table 5A to 5F. Unlike the table 4, you can report the figures in table 5A to 5A netted off with credit or debit notes. So this is the table 4. Table 4A to 4E. Coming to the B to C, you can net it off the credit or debit notes and show it the figure here. But from table 4B to 4E, you have to show the gross figure. And if any credit note or debit note, that you have to disclose it separately. That is from the 4I to 4L. But whereas coming to the table 5, you can show netted off with credit or debit notes here. So discussed earlier, you can club exempted, nil rated, and non-GST in the exempted row itself. But now onwards, you have to disclose the non-GST supplies separately, and you can club exempted and nil rated supplies. So this is an option that you no need to declare the credit note, debit note separately in table 5, but whereas in table 4, you need to declare it separately. These are all the tiles in GSTR 9. If you open the GSTR 9, you will find all these details, table 4, 5, 6. Just for reference, I have put this slide. The part 6, that is the other information that I discussed in the overview of the GSTR 9. Table 14, in this we require to use the details of demands and refund details. And table 16, we need to bifurcate the inward supply that received from the composition taxpayers and job and goods received on job work basis, and the composition that's goods sent on approval basis. We need to bifurcate here. It is optional table. Table 16 is optional. If you can bifurcate, you can put the figure. Otherwise, leave it. And table 17, outward HSN. From 21-22 onwards, we need to from 21-22 onwards, this table is mandatory, whereas inward HSN is optional. So one more thing, that the taxpayer whose turnover exceeding 5 crores is required to give the 6-digit, and turnover whose turnover is less than 5 crores is required to give the 4-digit HSN mandatorily. Now coming to the examples of the turnover reporting, we'll take some examples. So
yeah, I just give a context when we are looking at the example. So remember, for most of the time, at least in the initial periods, by now everyone have streamlined. There would always be a difference between the value which is there in the books of account, the value in your GSTR 3B, and value in GSTR 1. And the quantum of the difference will be to the magnitude at which people can make mistakes. I have seen people copying the data of the subsidiary company sales into the holding company sales, or copied the June month data into the July and just filed. Whatever their ability to make mistakes, they have made mistakes, by which there will be a difference. And the correction could have been done in the next month correction. Diligently, what the values will match is in case of annual return. So I'm presuming there will not be difference between 1, 3B and books. Even if people make mistakes on that, again, God cannot save. So GSTR 9 definitely can save. So let's see how we can correct it. The primary question people always ask or people always get is, what is the value that I have to report in my GSTR 9? What is the context of reporting my annual return? The way I want you to look at it, annual returns is an information that you are furnishing to the government. What is the information the government would be interested in is the turnover on which the tax is payable and paid. When they say payable and paid, the presumption is you have discharged all the taxes. You are well aware you cannot file GSTR 3B without discharging the taxes. So if you have a tax liability and you have discharged the taxes, that is the value, the information government is looking at. Let's say I have a turnover of 1 crore, but I did not pay the taxes. Unfortunately, GSTR 9 is not a place. Please note, GSTR 9 is not a place reporting of your turnover and liability and not paying of the taxes. So after you file your GSTR 9, your electronic liability balance will not change, electronic cash ledger balance will not change, nor your ITC. So using your GSTR 9 return, plain using your GSTR 9 return, you cannot pay the taxes, you cannot claim the refund, you cannot evade ITC, you cannot reverse ITC. Form GSTR 9 is there to show what you have done. What you have not done will not be there in your GSTR 9. When we say what you have done is what the taxes have been paid. Payment of taxes can be in two forms, using your GSTR 3B or using your DRC 03. The only relaxation there I will say is DRC 03, the tax payment can be made before filing of your annual return or after filing of the annual return. So whatever is the taxes that you have paid through GSTR 3B, through DRC 03 is the total taxes that you have discharged. Relevant turnover of that will be reported in your annual return. So there are 3 turnovers that I already have, which you are seeing on the left side of your screen. There is some turnover in the books of accounts, some turnover in your GSTR 1 and some value in 3B. Which amongst this will be reported in your GSTR 9? Nothing amongst this will be reported in GSTR 9. A new number which is kind of emanating from all, or which you can say as a right number in a layman language, if I have to say, the turnover on which the taxes are paid will be disclosed. If you have not paid the taxes either through 3B or through DRC 03, then it wouldn't find a place in your annual return. Let's see the example. Please continue.
Yes, only the turnover on which taxes have been paid, only that turnover will form part of the GSTR 9. Otherwise, it will be the reconciliation item in GSTR 9C. So let's see this example. This is a very basic, simple understanding. So as per my books of accounts, my taxable turnover is 1,000 and in 3B is also 1,000. Whereas my exempted turnover in books of accounts is 500, that is the actual turnover, and I reported in one only 400. And in 3B, I have not reported the exempted turnover. So coming to the exempted turnover, what is the actual figure? Only that I have to report in the GSTR 9. So here my actual turnover is 500. So I have reported in the table 5. In table 4, anyway, in all the cases, my turnover is 1,000. And I have discharged all the taxes on this 1,000. So I am reporting 1,000 in the table 4. So table 4 is the taxable turnover, and table 5 the exempted turnover on which taxes is not required to pay, and my total turnover. So there is no adjustments pertaining to this example. So my total turnover is 1,500 as per GSTR 9, and as per books of accounts, it is also 1,500. So let's move on to the next example. So the slide changes here. But taxable turnover as per books of accounts is 1,000, and as per GSTR 1 it is 1,000. But in GSTR 3B, I have discharged liability only on 800, and remaining liability I have discharged in the subsequent year through GSTR 3B, that is in 22-23. So how we have to report it here, we'll see. So as already discussed in the previous slide, the turnover which have discharged through 3B in 21-22 will have to be required in the table, report in the table 4. So here I have reported 800, and whatever the liability I have discharged in the subsequent year through GSTR 3B is required to report in the table 10. So now table 4 plus 5 plus 10 minus 11 is my total turnover. It is matching with my books of accounts. So now let's small one more change here. So okay. In this example, my turnover as per books of accounts is 1,000, but I have reported turnover in GSTR 1 at 900, but I have excess paid liability in 21-22. Instead of 1,000, I have paid on 1,100, and then GSTR 3B, I have made the adjustment of 100 because I have paid excessively in 21-22. That excess payment I have adjusted in GSTR 3 22-23. Now see how to report it in the GSTR 9. So as Venu sir discussed, only the turnover on which liability has been paid shall form part of the GSTR 9, and whatever the turnover paid through GSTR 3B is required to report in the table 4. So in 21-22, I have paid the liability on 1,100. So the turnover will form part of the table 4, and the adjustment which have made in the subsequent year that have reduced the liability in 22-23, that I will report in the table 11. I have reduced the liability here. So 1,100 minus 100 is the 1,000. This is my total turnover. So whatever the values we report in the GSTR 1 has no relevance. Now one more example here. So here my books of accounts turnover is 1,000, and my GSTR 1 also 1,000. But in 3B for 21-22, I have discharged liability only on 600. And on 100, I have discharged liability in 2023 through GSTR 3B. And on 250 rupees, I have discharged liability through DRC 03. Let's see how to report. We'll go one by one. This 600. Whatever the liability I have discharged through 3B for 21-22, I have to report it in the table 4. So I have taken this 600 in the table 4, and subsequent year adjustment that I have declared in subsequent year. This I have to report it in the table 10, and I have discharged liability on 250, but not through GSTR 3B, but discharge liability through DRC 03. So now I have to add this 250 to the table 4. So coming to this total turnover is becoming 950, but my turnover as per books of accounts is 1,000. So remaining 50 will be the reconciliation item in GSTR 9C.
Yeah. Just to add a point, in fact, Arpita has asked the same question in the chat. If I have missed out some turnover and I have paid through DRC03, will it be forming part of annual return? Answer is yes. So you can see here, my 250 rupees, which is there, is forming part of the annual return. And the 250 should be added to the table 4. The more important point, where do I report if I have paid through DRC03? The taxes that have paid through DRC03 will be forming part of your table 4. So table 10 is the taxes that you have paid using 3B in the next year is in table 10. DRC03 you might have been paid now, or you are filing your GSTR 9 in December. DRC03 might have been paid in December. Or you are filing your annual return in December and you are paying the taxes in the month of January 23. Still, the value of the taxes that you are paid or paying through DRC03 will be forming part of your table 4. So here, whatever the taxes that you are paying on account of the annual returns will be in your table 4. That is important point. There's a person, someone asked, is there any timeline for me to pay through DRC03? You said you can pay next month after the thing. You will continue to pay interest. But if you are not paying that, you are just reporting in your GSTR 9 and you are not paying the taxes, again you are inviting the second one more notice, which is system generated notice. Because today's systems have a robust reconciliation processes. So you have to make sure that you report the taxes. I want to pause here, and if anyone have any questions, maybe I want to take the questions at this point. Someone has raised the hand. I will prompt, maybe you can, Sultan Arif, if you have a question, you can unmute yourself and ask. Okay, I see Arupji also here. So welcome, Arupji. Okay, Sultan Arif's question is, we should file GSTR 9 and 9C because of the turnover petrol pump. Yeah, we will take the other miscellaneous question as it comes. All right, please continue, Jagadeesh.
Yes, we are reporting the turnover on which liability is discharged through DRC03 to table 4. So on adding it to table 4, we'll get a difference in the table 9, tax payable versus tax paid. So the difference should match with the DRC03 liability discharged amount. Okay, that's the one checkpoint we need to. Well, later we can prove to the department that this difference they have paid through DRC03. So keep it in mind.
Yeah, also in this slide, Mr. Ravindran was asking 300 should be taken to table 4 and not 250. The difference, what I out of 1000, I have only paid through 3B 700. The balance 300 is not paid. So the table 4 should be having 300 so that my annual returns and my books are matching. So, Mr. Aravindan, I want to clarify here. If you are making the payment of taxes for 300, then your table 4 will have 300. So, purposely, why we have put the value 250 here is, in your case, you have not discharging, you have not discharged for whatever be the reason. You have put only 250 rupees. So, that is why your table 4 will be having 250. This difference 50 will be dealt in either in table 9 of 9C or table 4 of 9, 5 of 9C, whatever we will see at that point. But it will be at 9C and not in GSTR 9. Hope this is clear. Please continue.
Now see the issues. If I declare my B2B sales as B2C and B2C sales as B2B in GSTR 1, can this be rectified in GSTR 9? If I rectified in GSTR 9, can recipient is eligible to take the input tax credit? This is the response. You see that, yes, you can, GSTR 9 is an annual return. and such mistakes you can do, provided you have to maintain a proper records and workings to not to satisfy the department at the time of the assessment. However, the eligibility of ITC to the recipient is depend on section 16 and 17. So coming to the next issue, output tax declared in GSTR 1 or 3B, but has limited to DRC 03, where an annual return, where it had to declare in the annual return. So in the earlier we discussed that what are the taxes we have paid through DRC 03 should form part of the table 4, and the difference we'll get the difference in the table 9, that the tax paid versus tax payable, and the difference should match with the DRC 03 amount. This we already discussed. Coming to the next part, coming to the RCM. RCM liability pertaining to 21-22, I have discharged it in the 22-23. So where I have to show this in the GSTR 9 of 21-22. As per the press release dated 3rd July 2019, it has been clarified that the RCM liability which have been declared in the subsequent year, in which year you have declared the same, it will form part of that year only, not the previous year. So for this, we have to maintain the appropriate workings to prove that that liability paid in the current year pertaining to the previous year, not to the current year. So unlike the turnover, it shall not be formed part of the table 9 of the GSTR 9. So it has to be reported in the GSTR 9 of the subsequent year only, not in 21-22. Now let's see this. Yes, forex adjustment. Forex adjustment. This will see it in the notes to accounts, but in notes to accounts, the forex difference because of the outflow and inflow, the difference will be combined, both outflow and inflow differences. But here we need to bifurcate the forex difference against import of services and the forex difference because of the export of goods and services, that we need to bifurcate only the difference which the turnover part should be bifurcated and put it in the reconciliation item in the table 5 of the GSTR 9C. So
yeah,
valuation.
Sale of capital asset, because this is little confusing. There are multiple items. You may, for a moment, you can ignore the slide. Look
Okay.
at me.
In case of sale of assets, there will be the valuation issue. That valuation difference we have to disclose separately in the table 5 of the GSTR 9C. I am not going into in detail.
Just hold on to the previous slide.
Okay, sir.
For capital for sale of capital asset. Yeah. So this is important because whenever you are finalizing your GSTR 9, you are only looking at the turnover in your P&L and the turnover which is there in the return. This is a common area where again the mistakes happen. Whenever you are selling a capital asset, what is there in your P&L either is profit on sale of asset or a loss on sale of asset. And majority of the times you will see some loss because it's a depreciated asset, some scrap value, whatever. The applicability of GST is on the supply, which is a whole value. So when you are selling an asset, capital asset, the sale value has to be taxed. And that is where it is very important that you also pay attention to the sale of an asset. Now, sale of a capital asset, I will classify into two things. One is motor vehicle, one is other than motor vehicle. If you are making a supply of a capital asset, which is other than motor vehicle, then you got to be sure that the value of the asset has to be considered for the purpose of supply. Again, you have two entries that you need to look at it. Some capital assets you might have taken input tax credit. Some capital assets you might have not taken input tax credit. If you have not taken input tax credit, fair enough, well and good. Whatever is the sale value, you pay the GST and close it. If you have availed input tax credit, you pay GST on the sale value, that is 0.1. On top of it, you also check the when you have taken the asset and you have availed the ITC, the unutilized portion of the ITC, because under the law it is expected the asset to be used for 60 months. Whether it is computer you are depreciating in 3 years, or whether it is office equipment you are using 8 years depreciation method, for the GST purpose it is only 60 months. So the unutilized portion of ITC also to be discharged as a liability, and you have to pay it. These are the two things which you have to check if it is other than motor vehicle. If it is motor vehicle, if the item which is sold is a motor vehicle, then I think, okay, this is not here. If it is motor vehicle, we have a notification 8/2018, the central tax rate, where they have mentioned the rate of tax to be computed on the margin, because the motor vehicles are per se not permitted to avail the input tax credit. So those motor vehicles, you have been given a choice. If you have made any profit on sale of such asset, on the profit value you will pay. Again, basis the CC 1200 capacity and above and less, 18%, 12%. So there is a notification. So the point I only want to drive to the users is you need a special treatment if you are selling an asset which is a motor vehicle. Next point.
So in case of any such valuation difference, that you need to show it as a reconciliation item in the GSTR 9C, table 5. Okay. In case my turnover is more than 5 crore and I am required to file the GSTR 9C, but I don't have any financial audited financial statements. As per section 44, I am required to submit the audited financial statement. That's in case of business other than companies whose turnover is less than 10 crore and my cash transaction is less than 5%. In that case, I am not required to get my books of accounts audited under Income Tax Act. So in that case, do I need to can I upload the unaudited financial statements? But section 44 is asking to upload the audited financial statements. Yes, in such cases, you can upload the unaudited financial statements alone. This is applicable for the 21-22 also. Coming to the 9 for a 10. So if you delayed filing of return, if you file the GSTR 9 belatedly, then system will auto calculating the late fee. But in some cases, system is not auto populating the late fee. So in such cases, do we remit the late fee voluntarily or not? In some cases, system, if it is auto populated, system is not allowing us to file a GSTR 9 without paying that late fee. So it is advisable, recommended to pay such late fee voluntarily as a law-abiding registered person. Even the portal is not calculating the late fee. So remaining input tax credit part will be taken up by Ashika.
Yeah, so before we go into input tax credit, any questions to any participant? Anyone have any questions at this point? You can unmute yourself and you can ask. Yeah. So as the session on input tax credit begin, let me set some context for input tax credit. Kushal Shetty is asking sale of capital asset other than motor vehicle. Please repeat. So Kushal Shetty, it is pretty simple. Sale of capital asset other than motor vehicle, you have to classify into two parts, whether have you taken input tax credit on it or if you have not taken input tax credit. If you have not taken any input tax credit, whatever is the value of the asset that you have sold, you go to notification 1/2017 and check the applicable rate of taxes and move thereon. If you have availed input tax credit, then along with checking that, you also have to apply 18 subsection 6, where it says that the unutilized portion of input tax credit, which ought to have been, the asset should have been there in the entity business for a period of 60 months. the unutilized period, you will also pay the taxes additionally. Yeah. All right. So I see there are no questions on the output liability. Let's move to input tax credit. Let me set some context for input tax credit. In fact, we have everyday morning reading session. So one of the interesting questions that came up this morning is, during the GST audit, if someone takes the registration in the interim period, the GST officer is asking the person to pay tax from whenever, even the unregistered period, but the input tax credit he is not allowing in that period. So it has become like a double whammy. I am paying only liability, but ITC is not allowed. If you carefully read the section 16 subsection 1 especially, it is the tax is input tax credit for the person who is registered. If you are not registered, you cannot take input tax credit. Okay, if I am registered, now let's move to the next situation. I am registered. I made a purchase. That means, will I get input tax credit? Again, answer is not a straight no. 16.1 now read with 16.2. You have to continue. Merely you are making purchase doesn't give you the entitlement of credit. You have to avail it. How do I avail it? I have recorded it in my tally books of accounts. I have debited purchase, debited SGST input, CGST input, IGST input, credit vendor. I did all that. Still, you do not get input tax credit unless you file your returns. Unless you disclose that and you file your returns, you will not get the input tax credit. To get input tax credit, you have to file your returns. Again, simple example. There is a participant who has, let's say, paid for today's session, but forgot to log in and did not attend. Just by paying, no one will get any value. They have to attend and listen, right? Likewise, you booked a movie ticket, but you forgot to go. So it's done and dusted. Likewise, you purchased it, but you did not file the return. So you will not get input tax credit. It will not be treated as input tax credit. Why am I saying all this story? The story why I am saying it is, you are filing your GSTR 9 for the financial year 21-22. When it comes to your turnover and liability, it's pretty simple. Whatever is the P&L turnover, liability, or the time of supply as per section 12 and 13 is your turnover and liability. But when it comes to your input tax credit, actually your purchases doesn't matter. You might have purchased in the financial year 2021, or you might have purchased in the financial year 21-22. It doesn't matter. You might have recorded it in the books of accounts as expenditure. You might have capitalized, you did whatever. You might have charged off the P&L, whatever. It really doesn't matter. What matters? What matters is you availing input tax credit. It could be belonging to previous year. It could be belonging to current year. But what matters, again, is you availing credit. Input tax credit means the credit that is appearing in your electronic credit ledger. Only that is your input tax credit. Those which is there in the books of accounts and not getting into electronic credit ledger is not the input tax credit. So this is one thing as a context one should be aware of. Yeah. So with this, I hand it over to Ashika.
So as we discussed about the outward tax liability, but determining the liability is not only where it ends. With the determining of tax liability is very important. The tax discharge has also been properly done. And one of the important components which we use for tax discharge is input tax credit. So input tax credit plays a major role because it helps in reducing that cascading effect. And reporting of it and furnishing of it in GSTR 3B is the most important thing.
I'm just getting a message that the voice is not audible. Is the voice audible?
Sir, it is very slow, sir. Low. It's very low.
Okay.
So, as we were discussing about the outward tax liability, now we shall discuss about reporting of ITC in GSTR 9 and 9C. First and foremost thing is to be remembered is you can't avail input tax credit by GSTR 9, neither by GSTR 9C. In both the situation, you can't avail the ITC. The only way you can avail the ITC is by filing your GSTR 3B, and then it is getting credited into your electronic credit ledger. 9 and 9C is only for reporting purpose. So tables which deals with ITC part in GSTR 9 is table 6, 7, and 8. Table 6, which deals with the ITC availment, means how much ITC you have availed by filing your GSTR 3B, not books. So how much ITC you have availed, that need to be reported. And that reporting they had divided into several parts. Broader way is one which is in all other ITC, one RCM. So this two is the broader head where they divide. If there is an ISD, then there is another division for is one which need to be reported, in which we need to report. Reverse charge mechanism is further divided into receipt from unregistered and receipt from registered. Both need to be separately reported. Further, with this dividation, we have to also divide our ITC detail into input service, capital goods. Who are belonging to refund sector, means who generally files their refund. They will be doing this input service, but others who are not doing, they are also advised to do it. The reason being, when we will be discussing about reversal, you will notice there are rules for rule 42 and 43. Rule 42, which deals with input and input service reversal, where you have a common credit. When I say common credit, it's mean where a person is engaged in providing both taxable and exempt supply. So in that case, rule 42, 43 is applicable. Plus, rule 43 is separately for capital goods, which sir explained in the previous slide while discussing about sales of capital goods, that it is spread over 60 months. And accordingly, reversal need to be done under rule 43. So basically, input service capital goods bifurcation is more important for refund and reversal. And to check the eligibility, because most of the eligibility disallowance, block credit section 17.5 relates to input service. So that's input service and some capital goods. So that's helped the department to identify where to check for the reversal and eligibility part. So as we discussed table 6, which is availment, table 7, reversal. Now coming to table 8, which deals with reconciliation with GSTR 2A. Now, if you will notice, we are talking about GSTR 2A, not GSTR 2B. As you all are aware, 2A is invoice-based and 2B is return filing date. So whenever we do for a year reconciliation, it's better we do with GSTR 2A, because that will provide us a better picture to see which ITC, the books of account, ITC which we have availed but more transaction not reflecting in GSTR 2A, and transaction which is there in GSTR 2A but not in books. So basically, we divide our reconciliation with GSTR 2A in 3 in portal, because this will give us a fair idea of what next course of action we have to do while filing GSTR 9.
I guess Ashika got logged up. She'll be joining. Okay. So let's look at the GSTR 9, the values that get in. Basically, as I said, whatever is the value which is reported in GSTR 3B is the value that goes to GSTR 9. Joseph madam, we haven't come to table 8. We'll understand the table 6. The value that goes into table 6 is merely replica of the value that you have reported in GSTR 3B. Basically, in 3B table 4, you avail the ITC. 4A is availment, 4B is reversal, 4C is the net ITC that you have availed. So in 4A, you have multiple subtables. 4A1 for import of goods, 4A2 for import of services, 4A3 is reverse charge, 4A4 is ISD, 4A5 is our favorite table, all other ITC. Any credit, we put it into 4A5 and file the return. That value should match with the value that you will now file with your annual return, GSTR 9 table 6. What you are seeing on the slides is the corresponding tables that the value get in. The only point or the only correction that you can do here, you cannot increase the value nor you can decrease the value. The table 6A gets auto-populated with the gross value of the credit that you have availed. Whole of 4A to 4A, summation of 4A is totaled up and put it into your table 6A. Government wants a further breakup of it. What is the further breakup of it? Or the right representation of it? Let's say I have imported the goods, even the import of goods, which ideally should have been reported in 4A1, by mistake I have reported in 4A5. Such corrections alone can be done in my annual return. So I am reclassification into a right category in table 6. So instead of reporting under 6B, I will report it under 6E. The point here is you cannot report an input tax credit more than what is there in your GSTR 3B, nor less than what is there in 3B. The expected is the right value that you have to report. During the period, you might have entered it, reversed it, entered it, reversed it, some adjustments happen. Probably what you can do is the right value of your 4A and the right value of your 4B between table 6 and 7, you will segregate. But the net input tax credit which goes to table 7J, the net input tax credit which goes to the 7J will not change. The 4C value will be going to the 7J. That is where you got to ensure that input tax credit is to be correctly reported. Please continue.
So as we were discussing, so if I'm shown in GSTR 3B of 21-22 will be shown in table 6, and as per the bifurcation which we discuss. Then ITC, which though belong to 21-22, but it has been availed in 22-23.
Again, your voice is not clear.
Should I continue?
You come here. Okay, I guess some audio issue at Ashika's end. 1 minute. She will be coming here.
So as we have a time limit for availment of ITC for 21-22 till 30th November. So the ITC which relates to 21-22 books of account in 21-22 can be availed in 22-23. That ITC will report in table 30. If you remember 10, 11, 12, 13. That 10, 11, 12, 13 relates to the amendment, correction, rectification, ITC availment or reversal, which belongs to the year financial year 21-22, but the impact of which has been taken in 22-23. Out of that, two table 12 and 13 relates to ITC. 13 relates to ITC, which relate to 21-22, avail in 22-23. Table 12, which relates to ITC reversal of 21-22 made in 22-23. So the ITC which relates to 21-22 avail in 21-22 will be reported in table 6, and ITC which relate to 21-22 but avail in or furnish in GSTR 3B of 22-23 will be shown in table 13. Similarly is the fashion with the reversal which is made during the period, during the year will be reported in table 7, and which is made reversal after the subsequent year will be reported in table 12. Now, error in ITC excess avail. Now, there may be a case, the ITC which we have availed in 21-22. It may be I might have availed excess. It may be a case I might have availed short. Now, excess avail ITC, if it is there, and if I have reversed in subsequent year by 30th November 2022, then I can show it in table 13 and I am permitted to do that. Now, if that changes I haven't done and I recognize it after 30th November, then the only option I'm left with is to pay the same through DRC 03. I can do it with GSTR 3B. So the thing is that reversal we will report. It's not the case we will not report the reversal. Suppose I was required to reverse 1 lakh, I reversed 80,000. 20,000 I didn't reverse. Even the time limit to do it till 30th November is also not there. Also got lapsed. So I can do what I'm while filing my GSTR 9, I will show in table 7, 1 lakh. Now my ITC will show that I am showing a difference of 20,000. That 20,000 reversal I will do by DRC 03, and same I will furnish my working in relation to same in GSTR 99C. Now in GSTR 9C there is a table 12 where we furnish our reconciliation of books versus 3B. So there in that we can give you the reason for difference, that I have excess avail which I have reversed by DRC 03, thereby giving full picture that excess avail has been taken care. Correction in GSTR 9, as I said, we can report it in table 7 and paid through DRC 03. Now shown as a liability in 3B. not permitted. If timeline has lapsed, that you can't correct it with the 3B. You can do it only through DRC03. But if there is an excess claim of refund of tax paid, then you have to pay through cash. It's not electronic credit ledger. If excess availment of ITC is there, obviously you can reverse it through ITC. But if it is a case of where you have get a refund of that tax paid, then you have to do it by cash, and you have to report that in table 14, where we give the refund detail. There you can give the reason that this much you are paying, and even in 9C you can report about this in table 12. Over here we are keeping our discussion limiting to reporting in JSTR 9 and 9C. Now, as we discussed for excess avail, there may be a case of short avail. Short avail, as we discussed, you have a time till November 22. In 3B is due to be filed, you avail it and you show it in table 13. However, if you haven't availed or it get lapsed now, then you won't be eligible to avail it, and GSTR 9 is not for availment of ITC. You can't avail any ITC. It's only reporting of what you have already done, what you have already furnished. Not avail, obviously credit will lapse. Now table 8E, we'll discuss about table 8 as it is linked to GSTR 2A. So thereby I will cover in little detail. Now these are the few examples we have taken to the tables as we discussed, so that you can correlate. Now if my books of account is showing 1000, my 3B is showing 1000. So obviously in table 6, we will report about the ITC availed. Now, if my books of account is 1000, my 3B is 800. In 21-22, I have availed, and 200 I have availed in 22-23. So as we discussed, ITC which I have availed and reported in 21-22 will be reported in table 6. ITC which I am carry forward and availing in 22-23 will be reported in table 13. Similar way, that was a case of where carry forward. Now excess claim. Now there may be a case as per books it's 1000 and 3B it is 1100. So I have availed excess. Now this excess availment I might have reported in 22-23. If I have reported in 22-23 and I have reversed the ITC, then it will be going by table 12, which deals with the reversal made in subsequent year. And I will show in table C exactly what the amount of ITC availed. I will not show what is there in my books, not 1000 rupees. I will show straightforward 1100, which is there in my 3B availed, and 12, which I have reversed in next year. Because if we don't go in this fashion, then net of 1000 will not come. Your return file will not give us the correct disclosure, which need to be given in GSTR 9. So this is what we discussed about table 6. This is what first is all other ITC, which is divided into input capital goods and input services. This first 6A is a auto-populated data. You can't change it. This is it will show the total ITC availed by you in during the period 21-22. It will not take the impact of carry forward ITC. Table 6 also does not deals with carry forward. It's only table 12 and 13. So first is the auto-populated data of 3B. Then you have to furnish your all other ITC details by dividing it into input, capital goods, and input services. Then it's cover RCM. RCM is in two parts. One is for registered, another is unregistered. Now it's very important over here, like in one of the case, what happened in GSTR 2A, it was showing that some party I have received a transaction, which in that he has clicked in GSTR 1 while furnishing that RCM is applicable. Yes. Due to that, department fastened the liability, saying that as in 2A, it is showing that there is a liability under RCM, you are liable to pay. Now, when we come to know about this, and when we discuss with the client, now client is saying this transaction does not belong to me. I'm not even aware of the party. Now, department is very rigid. Now it's saying me, you prove me that this party does not belong to you. To prove for whom we don't have any transaction is very difficult. You can show your books of account. You have to get a declaration from a person whom you don't know to prove that there is no transaction with you. So be careful while doing reconciliation with GSTR 2A. If you find any transaction on which RCM is said as yes, whether it's belong to you or not. Because for department, GSTR 2A is like their Bible for ITC. On that basis, they allow you ITC, and that basis they disallow. So it's very important while doing reconciliation, check each and everything, whether it's a match only in books, only in portal, even for reverse charge, what is showing as yes. Because sometimes it's happened, it's a forward charge, but by mistake, your supplier has clicked yes on RCM. That all need to be amended and corrected to ensure your ITC availment, nobody question. So what is registered, obviously, when it's a B2B transaction, it will be reported over here, dividing into input capital goods and input service. Most of the time, it will be reported in input service only, because maximum services, notification 13 is the main. While doing your RCM liability, please check your PL expense side fully. For ITC, as we have also discussed in various previous session of, you should classify your expense first into two parts. First, which is with GST, second, which is without GST. With GST, then you have to check for ITC eligibility, and which is without GST, you have to make sure you check, is there any expense which is falling under RCM. If it is falling under RCM, make sure you discharge it and you properly disclose. There may be a case while filing your 3B, you might have not disclosed, as sir discussed, that there may be a thing that you all reported everything in all other ITC, or by mistake, all other ITC put under ISD, import of goods, while filing GSTR 3B. That or disclosure correction you can do over here, but you can't avail the ITC. So if in any disclosure, you need to be, you can correct over here. If it was import of goods, you can reduce your all other ITC and show it under import of goods, import of service, or reverse charge, as the case may be. So C and D wills with RCM, import of goods. Import of goods also do your GST reconciliation with 2A or 2B. Even 2A and 2B show import of goods detail. Check with it. If you find any discrepancy, you have an option. They have issue advisory whereby you can correct it and make sure your data represent what is there in your books. Input tax credit received from ISD. If anybody has input service distributor registration, that also need to be reported. Amount of ITC reclaim. Now, amount of ITC reclaim arises in the case of payment not made within 180 days. As you all be aware, if you don't make payment to your supplier within 180 days, you are liable to reverse that ITC. Once you reverse, you are eligible to reclaim that ITC on making payment to the supplier. So this 6 Act specifically deals with that type of cases. So that is where you have to report it, because that's where the department will be able to track which is the ITC availed during the period, which may be past period availed due to 180 days non-compliance. Then you will get the total credit, transitional credit. Now due to Supreme Court judgment, now it has been again reopened. If anybody have a credit, which is Tran 1 need to be rectified or ITC need to be claimed, they have an option. They can go ahead for it. And this is how we will drive our total ITC taken during the period. Then this is the reversal. So rule 42 and 43 I have already discussed. Section 17.5 is a block credit. Tran credit is, if anybody have that, then that need to be reported. Rule 37, payment to supplier not made within 180 days, 39 ISD. So specific to what reversal, there are specific clauses they have given. If you are not covered, then you have to go with other reversal. Now coming to table 8. The table 8, before proceeding with table 8, the first job is to do the reconciliation with GSTR 2A. First, you reconcile what are the ITC which is there in books and what are the ITC which is there in 2A. Now, the first part of 2A will be auto-populated, and this data will not match with the 2A of the present, because in GSTR 9, they take one cutoff date and accordingly they auto-populate. So this time it should be 30th November for auto-population of ITC as per GSTR 2A. But when we do the reconciliation, we do it as on date. So maybe on December, when we are doing reconciliation, our 2A figure will be different than what is auto-populating in 8A. Then what is shown as B at H, all other ITC, because 2A does not consist of RSM, because very less persons are there who are B2B transaction. So they consider of 6B, which is all other ITC. Then come the impact of carry forward and brought forward. Now there may be a ITC which you have claimed in 3B, but it relates to 2021. Like as we discussed, even for 21-22, there is a time limit to avail till 30th November. For 2021, there was a time limit to avail till 20th October. So if anybody have claimed the ITC of 2021 in 21-22, that ITC will be there in 3B. So in this, you have to take net of effect. As my 3B, which is of 10,000 rupees, of which 1,000 may relate to 2021, which I have availed in 21-22. And in a similar fashion, there may be a credit which I haven't availed in 21-22, but I'm going to avail in 22-23. If I say GSTR 2A, GSTR 2A show the during the period. It's not show the ITC which has been carried forward. So my GSTR 2A figure needs to be reduced from ITC, which is I am carry forwarding and going to avail in 22-23. Plus, it needs to be added with the ITC, which relates to 2021, but avail in 21-22. Because 2A figure does not include past credit claim in this year. So in that way, 8C is net off of ITC carry forward and ITC brought forward is reported over here. What's the difference come is a auto-generated. After that, if there is any transaction in 2A, we classify between 8E, 8F to decide whether it was eligible, but we didn't avail, or it is ineligible in itself. That need to be reported over here. Import of goods, as I said, GSTR 2A also auto-populate that based on IceGate custom website. So this is also there. So this information also need to be filled in. There may be a case you might have import of goods of 1 crore, but you might have availed 80 lakhs. That information need to be disclosed over here. If any ITC left out over here, it will lapse. However, if there is a difference which is negative, then you need to be very much careful. Positive difference, okay, but negative difference, be ready with your explanation, with your proper reconciliation, because department may ask you why there is a difference. I hope so. Most of you must have got GSTR 2A versus 3B notices. Multiple notice they have issued on this ground that 2A is the ITC availed by you in GSTR 2A and in GSTR 3B is more than ITC available in GSTR 2A. To counter that, keep your reconciliation ready so that at that moment you don't need to struggle. Everything be ready, you would be having proper explanation and reason, because they come after 5 years, and after coming after 5 years, not possible to track down what was happened at that time. So it will be good if we maintain a proper reconciliation.
charge on the mother.
So as we discussed, now summarizing that GSTR 2A part, eligible and avail in 21-22 means ITC, which is matching, that will be reported in 8B. ITC, which is carry forward, will be reported in table 8C. If there is ITC, which we have missed out and time has also lapsed, that will be reported in 8E, and ineligible credit will be reported in 8F. Now coming to the part of tax payable and tax paid. Now, as Jagadeesh discussed about table 4 and table 5. As per the table 4, tax payable will be auto-calculated over here, and tax which is paid through ITC or cash will be auto-generated. You can't change it. It will be auto-generated. If there is, you have disclosed excess tax payable compared to what has been paid, you have to discharge that tax with DRC 03 and write about it in GSTR 9C while giving your reconciliation. So this is what the gist of tax declared in return filed during the financial year. Tax payable will be auto-populated and even tax paid also will be auto-populated. Tax payable will be auto-populated based on table 4, and this tax paid by either through cash or credit will be auto-populated based on GSTR 3B. Now coming to part 5, which have been covered by way of outward in table 10 and 11 by Jagadeesh by discussing about table 4 and 5, and 12 and 13 we just now cover with the ITC part. So I'm not going in detail again. The only thing you have to remember, you still have time to do the rectification. You still have time to avail the ITC due to timeline extension, which has happened now. If any tax is payable, obviously it will come. It is also auto-populated. If you are filing online or even if you are doing offline utility, if you have shown your tax payable more than tax payable, it will be auto-generated over here. Now, particular of demand and refund. Now, who are having their refund, they have also required to report this. Refund need to be reported on the basis of filing, not on the basis of period. Okay, so in 21-22, whatever refund you have filed, whatever refund has been got sanctioned, that need to be reported over here. Not that as because we are filing for 21-22. Obviously, refund of 21-22 may not be completed in that financial year. So what is the mention of this table is refund file in that period. So 21-22, when you are filing, it may relate to 2021-19-20. All that refund which is filed during that period need to be reported over here. Similar is the situation with the demand also. So it's a claim, sanction, rejected, and pending. That's what the application you did, what the amount you got the sanction. There may be case of rejection, or it may be you applied, but still there is no further communication. Then similar is the situation with demand also. When we say demand means not show cause notice issue, not ASMT 10 issue. Demands, when we say, is the order where you have received the order. Because when the officer initiate the audit or when the officer initiate the investigation, they are only proposing, they are saying, they feel that this much of tax is payable or this much of liability you have to discharge or ITC you have to reverse. But it is just a proposal, it's just an allegation. But when the order is passed, it becomes a demand, because only after the order is passed, recovery can be initiated. So at that time, when if you have any order pending, that need to be reported in table 15, F and G. Then it's about supply receipt from inward supply. This information is optional. It's upon you whether you want to furnish or not about the composite dealer, deemed supply, goods sent on approval basis. HSN summary of outward supply. Now this is mandatory. Earlier it was optional. Now, as Jagadeesh said, if you have a turnover above 5 crore, you have to report 6 digits. If below 5 crore, 4 digits need to be reported. Even in GSTR 1, it is mandatory. So if you are not furnished, start furnishing it. They might impose you the penalty for non-furnishing, for residual penalty, and residual penalty is also 50,000, 25 under CGST, 25 under SGST. So HSN reporting is mandatory. Even in invoice, we are still seeing many of the persons not mentioning in invoice proper digit. Either they are mentioning 4 digit and leaving it. You have to see your turnover and accordingly make sure you comply with the reporting of HSN. HSN detail of inward supply is still optional. It's depend upon you whether you want to furnish or not. As there may be a case, you might file GSTR 9 line C date, though as of now, nobody is declaring it because it is not auto-generating. Most of them are filing nil only. But if you want to pay, you can disclose over here and pay it off.
Yeah, thank you, Ashika. So before we move to GSTR 9C, any questions to any participants so far? I think some of the questions were answered on the go, but if some question is not answered, maybe you can share it. Of course, yeah, don't worry about the PPT, the entire PPT, the Excel file, which I'll be showing, like you'll all get everything. Yeah. Whatever is the registered email ID, you'll get that. So any questions to anyone at this point? You can unmute yourself and ask.
Hello, sir.
Yes.
Sir, I have one doubt regarding HSN summary, which is applicable from financial year 21-22.
Correct.
Sir, if I have not reported outward supply in any GSTR 3B or GSTR 1,
Okay.
or maybe I have reported short amount in 3B regarding outward supply, then I have to give full HSN summary of all the outward supply, or which I have reported in GSTR 3B that I have to give.
Okay. So let me put it in.
Because, sir, sorry for disturbing you. Actually, in some last some of days, many clients are receiving notice regarding outward supply, difference between outward supply and HSN summary in GSTR 1. I think for August 2022. That's why I am asking you that now what we have to do in this case.
Yeah, so it is now mandatory. No, it's not like now. It has been mandatory for reporting the value of HSN supply, and we had notification which was clearly stating that B2B outward supply, you have to disclose the HSN and the report. So table 12 gets validated in GSTR 1. The value of it is especially whatever the value that you disclose to table 4, is it there or not, is what the value that you get. Now the question that is this, what is the value that I need to report in table 17 of GSTR 1? The table 17 of GSTR 1, you will be reporting the value corresponding to table 4 and table 10 of GSTR 9 table 17. So जिस रिटर्न का टर्नओवर हम बोल रहे, उस रिटर्न का वैल्यू इक्विवेलेंट HSN रहना चाहिए. So the plain language, your turnover and the HSN are two different tables. Make sure you both the tables HSN match. As you said, you have been getting notices. You will get the notices. Most of the notices are system generated notice because the system looks at data being matched. If the data is not matched, you will get a notice.
Yes. Okay, sir. Thank you.
Any other questions to any participants?
Hello, sir.
Yes, ma'am.
Sir, that IDC of financial year 2021, which we availed in financial year 21-22,
Correct.
And brought forward of 21-22 to 22-23, whether we can show it a net off in the ADC.
Okay, so when you're talking about table 8C, you will net off with the previous year because you're starting with that. That is what Ashika has given an example and she has shown that.
Okay. So carry forward of from 21-22 to 22-23 can be shown net off.
Any other question? Okay, are there any questions unanswered in the chat? Maybe I request Jagadeesh and Ashika to look at the questions if they're in the chat. If something is not answered, please answer them. Again, I am muting everyone in the interest of thing, and we will proceed. All right. So now let's come and understand GSTR 9C. 9C is a little different from 9. Yeah, let me share the screen. Okay, is the screen visible now? Most of the times I ask yes and no questions so that at least some interaction will happen. So is the screen visible now? I'm sure you cannot unmute yourself and answer, but you can put as yes in the chat. So at least some people are attentive. Okay, so Chantu Pal, please answer my query. Sir, you can put your query yourself or you can unmute yourself and ask. No problem. Okay, let's come to what is GSTR 9C. See, 9C is another animal which is of reconciliation of the reconciled data. So to prepare GSTR 9 itself, Jagadeesh shared some information, Ashika told something, and the beginning I told something, right? Basically, there is accounting standard 9, which talks about your revenue recognition and different point in time. Table 12 and 30, section 12 and 13 of GST talks about your supply at a different point in time. So there is a timing difference in your liability. Likewise, books of accounts purchased in one period, ITC availed in subsequent period. This year purchased ITC may be in this year or next year. Purchase was in last year, credit in electronic credit ledger in this year. Anything could have happened. Finally, while you are reporting in your GSTR 9 for turnover, you are only reporting the turnover on which the taxes are paid, and ITC which you have availed. So you have broadly two sets of data. From your books of accounts, GSTR 1, 3B, some adjustment you figured away, and you have prepared your GSTR 9. A combination of all these three items, value flown into GSTR 9. But if I am the officer, assessing officer, how do I say this is correct? The source to say this is correct or not, I will presume my values between audited financial statements, someone has audited it, should match with GSTR 9. Of course, it should not match for many reasons. I want a reconciliation of it. The reconciliation of this is your 9C. Earlier, this was a certificate which has to be prepared by a chartered accountant or a cost accountant, but now it is a self-certified by the SSC themselves. Now, let us look at what does the values that get into the GSTR 9C and what is the audit objective. Again, 9C is a beautifully drafted. Simply put, there are 4 parts. They want you to reconcile turnover, they want you to reconcile tax liability, they want to reconcile input tax credit. Turnover, liability, and input tax credit. Junior level discussion. If someone wants to understand, if someone says, what at all is the GST audit? Why GST audit? If someone wants to actually understand this and put a question, let's just look at from a layman. What do you want to do? You want to comply with the law. What do you mean by compliance with the law? Have you paid the taxes or not? Have you paid the taxes or not? Generally, when a layman, when you say tax, means the tax that is paid in cash. But if I put it into a mathematical way, the tax which is paid into cash, if I have to put it in translate into math, then we talk tax means the gross tax liability minus net input tax credit. So how do I get my gross tax liability? The turnover multiplied by rate of tax. The turnover multiplied by rate of tax. When I say turnover, is it all the turnover? I am talking about taxable turnover at an appropriate rate of tax. How do I get my taxable turnover? The total turnover minus exemptions is what I will get the taxable turnover. Again, when I talk about input tax credit, I am talking about eligible input tax credit. So the purpose of GSTR 9C is to check whether everything has been complied or not, including your prior period adjustments, such as classification, all those things. The GSTR 9C form is also being designed in the same way. They have designed the form appropriately in such a way that you get the right values. You get the right values. Let's look at what are the right values. I am supposed to have disclosed all my turnover. So I am flowing from here. I should have disclosed all my turnover. So if my turnover is matching or not, a reconciliation statement is prepared in my table number 5. If my turnover is matching with the expected P&L, adjustments, derived turnover that should have been offered to the tax, if that derived turnover is matching with my GSTR 9, well and good. If it is not matching, I will give a reasons or an explanations to why it is not matching in my table 6. But what am I more interested? I was more interested in taxable turnover. So how do I get? I remove my exemption, I find out my taxable turnover. If my taxable turnover is correct or not, that working is done in my table 7. If that is matching, well and good. Not matching, I give an explanation in table 8. Why am I deriving turnover? I want to compute my liability. So the turnover multiplied by rate of tax. These details are given in table 9. Compute the tax liability. If there is any difference, you give an explanation in your table 10. So basically GSTR 9C is a very beautifully drafted form. Owing to these, whatever which we have said, if there is a liability owing to all these sections, if there is a liability that is coming up, we compute and pay the taxes liability in your table 11. Then, so we have addressed my liability. What is next is ITC. And when we said ITC means eligible ITC. So the eligible ITC, how do I say it is eligible, not eligible? The government looked into two-way reconciliation. One is like your bank reconciliation, like how in my books of in my bank book, not in passbook, check received, all those reconciliations which we do. Likewise, whether accounted in books of accounts or not, accounted in next year, accounted in previous year, you do some reconciliation to try out what is there in the books, what has been claimed. If it is matching, well and good. Not matching, give your explanation in table 13. I make so many purchases during the year. But we know 17 has a restriction based on usage. whether used for taxable purpose or exempt purpose, used in the business or used for personal purpose, or is it used for the restricted 17.5 or some restrictions, used for restricted category, used or other categories. So you bifurcate all your ITC equivalent to your clause 44 of tax audit by each expenditure wise. Capture the total ITC. Of the total ITC, how much is eligible, you take it to the outer column. Is that the ITC you are claiming or a different ITC? If there is a difference, you give the explanation in your table 15. Owing to ITC, if there is any liability is coming, that liability is captured in table 16. So you have two tables, table 11 and table 16, which is capturing the input, the liability arising on multifolds. You have two tables which is capturing the liability arising on multifolds. So that is why if you see the GSTR 9C was divided into 4 parts, and the last part, the 5th part, is the additional tax liabilities that if at all needs to be paid is captured in your this. So that is where Jagadeesh was saying that between the 250, 300, that will be a reconciliation item. So whatever which you are supposed to pay, you recomputed and so-called paid in GSTR 9. On top of it, something which is missing out will come to your 9C. In fact, 9C was meant for the audit. Given that 9 and 9C you are doing by yourself, most of the time you will reconcile and pay off, discharge the taxes through DRC 03 of the annual return. So before I move on some issues on GSTR 9C, any questions to anyone on 9C? You can unmute yourself and ask. Any questions? All right. So I think we can move further. Now, so on 9C, I have listed some issues and solutions, both for 9 and 9C, which people commonly ask. Just to summarize, if I have to, before move on to the technical session. Firstly, what is the right source of information, whether books of accounts, GSTR 3B, GSTR 1, everything. You might have forgot reporting in some place. You might have filed a nil 3B or nil R1, could be anything. Or books of accounts, after the audit, the entries would have come, you received the money, forgot to raise an invoice, or advance has been received, taxes not discharged, anything. You correct everything, and the correct value is the right source of information. The correct value can be sometime in the books, sometime in 3B, sometime in R1, a combination of all those things. Where do I discharge the disclose and discharge the additional liability? It can be discharged through 3B of the next financial year, that is this financial year 22-23, or it could be discharged through DRC 03, which have not been discharged till date. You can still discharge through DRC 03. The reason why we are having session now is this extension. It was there till September. Now that is extended till November, and November is 30th November. So today is like this return which you will be filing 20th of this month. You still have an opportunity to correct it. If you have received advances and the tax invoice is issued, right? But in GSTR 1, you are showing it as advance only. If you have issued you have the opportunity to correct your advances in your table 11, advances received, advances adjusted. You forgot to do that because GSTR 1 is technically not creating any liability. Then you still have an opportunity. Instead of showing under 4F of R9, again, pardon me for using the subtable numbers, you should show it in your 4B of R9. So appropriately, you will have to move them. If you have done a wrong type of tax which is charged in the tax invoice, let's say you are supposed to pay IGST, you have shown it as C+S in the invoice. Later, you have corrected the invoice. You have assuming you have discharged the correct tax. So report the correct tax. Conversely, you have issued the bill correctly. The bill is showing CGST as GST, but while making the payment, you paid through IGST. We have a provision 77 permits you to pay the correct tax and claim a refund of a wrong tax. What is the proof that what is the excess tax and wrong tax paid is your GSTR 9. In your GSTR 9, table 4 will be showing a lower liability. Table 9 of tax payable will be showing a lower value, while 9 paid will be showing a higher value. So the gap between 9 payable and 9 paid is a proof for you to claim a refund that you have paid excess taxes. How to deal with the differences between 1 and 3B? Correct it. The opportunity is there today. So prepare your GSTR 9. In a while, I will show you a tool. How do we automatically reconcile and prepare your GSTR 9 and the corrections? Use that opportunity and correct it. Can I correct now? Yes. You can correct everything. Please correct it. If the exports are originally reported as with pay, later you have corrected it as without pay. The moment it is with pay, it will come to table 4. The moment it is without pay, it will be coming to table 5, because 4 where there is a liability, 5 there is no liability, right? So correct it. And if you have not corrected it, hypothetically again, you are always supplying goods under LUT. You are never discharging the taxes. But in R1, you forgot to put the tick, with payment, without payment, the check boxes, you didn't do the check box. R1 is showing as with the liability, 3B is showing as without liability. Physical invoice, you have given a declaration on the top, exported under LUT. You have all those things. In such a scenario, you will still report this value in table 5 and not in 4. Yeah. Sometimes you have not reported exempted turnover. Table 8 is like a neglected. Many people neglect other than table 4 and table 7, nothing is important in R1. So we don't report advances, we don't report HSNYs, especially document summary exempted, nothing is reported. Can I report now? Of course, yes, you can report now. Then the common question, does the no supply includes pure agent transactions? Does no supply includes your pure agent transaction? I will make a diplomatic answer here. It could be yes and a no. How you are recording in your financial statements, I would suggest you do the reporting accordingly. Your 5F of GSTR 9. For example, I have taken an engagement of filing the GST returns from you. So every month, let's say I will raise an invoice of 1 lakh rupee. Along with that, you say that, okay, whatever is the tax liability, you also discharge. So this month you have paid me 6 lakhs, 1 lakh as my fees, 5 lakhs as some tax that needs to be paid to the government. So my bank statement is showing a receipt of 6 lakhs. How did I make a claim of 6 lakhs to you? In my invoice which I am raising, okay, professional charges 1 lakh, and below I am mentioning the reimbursement towards the tax payment. I am attaching a challan of the tax payment. Technically, it's a pure agent reimbursement. How am I accounting in my books of accounts? This 5 lakhs which I have received from you is actually a liability balance sheet item. I will not even route through P&L. So it is advance received from you, which is a liability to pay taxes to the government. I will park it into the liability ledger, and whenever I make the payment, I will offset it and pay it. In such a scenario, I wouldn't recommend you report it in your table 5F as your no supply. But some people have a habit of recording it as other income, debiting as rates and taxes. Is it a right practice? I'm not getting into the accounting of it. I'm not an expert on it. But if you have that practice, I would say you put it in 5F. At least it will match, especially during reporting. how you have reported to your income tax matters. Today, there is a pure data exchange between CBDT and CBSE. You log into your 26 AS, AS and TIS, you see the turnover as reported in GSTR 3B. And you log into GST portal, you have a value that is reported in income tax. So both values are visible. So my answer would be how you are reporting is what you should be reporting. Next, the last question, should HSN summary be reported for advance received? In my view, HSN summary will not be reported for advances because I have received only advance. I have not made the supply. So the HSN summary will be only reported for the supply and not the advances. With this, we have come to, oh, okay, there are some more issues on the ITC. The segregation of ITC into input service capital goods, is it mandatory? People ask this question. I will say yes, it is mandatory. You have to do it. Again, today's system audits are picked basis the risk which system determines. You know, by filing your GSTR 3B, we can make out what is your profit ratio. Like what? My 3B gives me a profit ratio. I don't disclose. Purchase value itself is not disclosed. How does the profit? It's like I myself don't know how much my business profit is 20%, 25%. I don't know. How will my system know? Answer is yes. You know, you are availing input tax credit, which is purchased. You have a gross liability, which is there. So the tax paid in cash divided by the gross liability give you your gross profit ratio. Now, some businesses are expected basis the HSN basis, whether you're wholesale, retail, the department has all the data. This should be the turnover. Basis, this should be the profitability. But assuming you have made an investment in capex, that means you will have more ITC. Only when you make this segregation between capital goods and input services, you will have a right reporting. Errors made in 3B between a right reporting, again, you can do it. You can correct it. While discharging your liability under RCM, look at GSTR 2A, there is a value which is auto-populated, do it. If there is a credit reclaimed, availed, reversed, if you are making some mistakes in your GSTR 3B, you can net it off. Your 6A can be different from 6J, that's fine, no issues. Because you have double reverse and double availed. However, the 7J should match with your table 4C. So just make a watch of it. Can you reverse ITC in GSTR 9? See, technically, R9 is not a place for putting some value for reversal. However, like liability, if you have an ineligible ITC that you have availed, now you realized it during the audit, the auditor has enlightened you that, okay, you cannot take a credit of motor vehicle or a food bill or LTA claimed by employees, so whatever be the thing you want to reverse now, please reverse using DRC 03, annual return, report that value in table 7, because you are only reporting what you have action you have taken. GSTR 9 will only have place where you have taken some action. Next is reporting, splitting of expenditure expense wise for ITC in table 9C. It is cumbersome. I don't know, time consuming. Is it really required? Answer is yes. You have to do it. So some of you may say difficult, but still you have to do it. So that's what I'll say. Yes. So we have come to end of this session 1, the theory of GSTR 9 and 9C. In a while, we move to the practical side of it, how we will do all of that. So any questions to anyone at this point? Anyone would like to ask any question? I will unmute. You can unmute yourself. Yeah, it is open for asking questions. Any questions, participants?
How is it possible 3D will not flow in July?
What? Ashika coming in.
There is one query
Now,
about 3D March month 3D claim in July, but not appearing in the account. That is not possible. Last query.
okay, so I can see a query, Janardhan, Umesh. There was instance where March month ITC claimed in 3B of July, but the same is not appearing in electronic credit ledger. How do we deal with it? Umesh, one thing, portal doesn't know whether it is March month, which month, portal really doesn't know. So when the portal doesn't know, it means whatever you are filing is the credit of July. It is not March. So very unlikely whatever you are saying would be true. But yeah, if something what you are saying is true, then you have to talk to the GST grievance, because we definitely don't know what how to make it something better. Yeah. So technically, this according to me should not arise. But yeah, if something you have, you can raise a grievance. Janardhanji, your query is not understood. Can you unmute yourself and ask, please? Yeah, so there's one, Paul G, you have a question on negative RCM. There cannot be a negative RCM. Maybe the query is not right. Okay, Janardhan, I think you have two devices, so echo is coming.
Yes, sir. Hello.
Can you reduce the volume or mute other device, and you can ask the question from this? Again, Lenovo, I don't want to address someone as Lenovo, but that's the starting statement. Request, please change. So Lenovo is asking, for financial year 21-22, we had export sales made. By mistake, we clicked as with payment of tax. Can we be able to correct it in 999C? Yes. Please report it in table 5. This is what I have said. And you can still correct while filing your 9 GSTR 1. You can amend those records. Or if you have GSTR 1, which is pending to be filed before 30th November, you can still correct it.
Sir, where we can show last year RCM adjustment?
What do you mean by adjustment, ma'am? Can you be very clear?
Last year negative adjustment.
Well, how can there be a negative adjustment? I didn't get that point.
Sir, last year we have RCM adjustment in negative. How
You
can
have
we show?
paid extra RCM last year and you have short paid in this year. Is that
Yes.
what you're trying to say?
Yes, yes.
Okay. So how did you deal with that in your GSTR 3B? So technically, you have reported a higher value in 3.1D of the last year and a lower value in 3.1D of the current year. If that being the case, you have to carry forward it to the subsequent year through table 11. In the previous year, that you should have done it. In the current year, while you are reporting in your RCM, your 4E, you would report the correct value or in your this and take it to your GSTR 3B a correct value, the table 6 correct value. So you got to balance it such a way that you should be clearly able to establish that there was a excess payment of the taxes and you have shown a lower ITC in RCM last year and you matched it in the current year. So your 3B and R9 should go hand in hand. And we can take it offline to understand, but broadly, it can be corrected and reported.
Okay,
Any
sir.
other questions?
Okay, thank you.
All right. So if there are no questions, let me move to the technical side of it.
Hello, sir.
Yes, ma'am.
Hello.
Yes,
Sir,
ma'am.
suppose subsequent carry forward credit, if you are if we have claimed lesser than the carry forward value last, is there any problem, sir? Like suppose, for example, 2021 carry forward, if it was say 100 rupees last year, but if we have shown this year availed 80, is there any problem?
No
Last
problem.
year, no problem.
No problem.
Okay, okay,
No
thank
issue.
you.
Like I'm supposed to take 100 rupees. I forgot. I did not take it. That's okay.
Yeah, okay, okay, thank you.
It will be coming in your 8E and 8F of R9. Again, pardon me if some of you have not registered these table numbers. It is mandatory that you get it your GSTR 9s validated through your CA, though even though it appears to be a simple, when GST introduced, even today you go to a business person and say what is GST, he'll say what is that? Earlier I was putting 14.5% VAT, now I am putting 9% GST, 9% as GST. That's all. There's nothing in GST. No. And the person who reads GST every day, he still feels okay. There are many things in GST I don't know. Now we'll find always two extreme people. Don't worry. Make sure you are not hit by system generated notice. Jayesh, do we have to pay RCM on all import of services? Layman answer, yes. A technical answer, look at the place of supply. Does the place of supply falls in India? For example, your director has traveled to abroad on some export show and he has stayed in a hotel there. He booked the hotel, everything. So will RTM applicable for transactions origin incurred died in that country? Answer is no. So plain answer, all import of services will suffer RCM, but go by place of supply. Read section 13 of GST Act. Can we report a negative figure in R9? No, meaning there are some places the negative report will come in your 9 and 9C because there is a plus minus system will permit. Like for example, my table 6 value is less, table 7 value is high, your 7J can go negative, or in your table 7 of 9C, erroneously some unprecedented, some higher number came up. Possibilities are there, but technically negative values will not come up. All right, so it's already 5:15. I would request another 10 minutes extension because I'm supposed to start my session at 5 o'clock. I am starting my session now, which is the technical session. All right, so what is my technical session? Let me start with, let's share my screen first. So there are things there are two things which we are going to see now. First, how to read a JSON file. So I have a JSON file. So here is my JSON. For people, it is not visible. It is looking very small number. Don't worry, even for me also it is not visible in a great way. This is some 4 MB file, and let me open it. So this is a JSON. Let me convert. Let me beautify it for you to understand. Okay, this being a little long file, it is not showing up. It is taking time. Yeah. So this got converted. Now, if you can see, this is a file which is running into, it is an 8 MB file running into some 87,000 records. Yeah. So it's okay. Now, if you get files like this, or you download your GSTR 1, 2A, 2B JSON files, how do I work with a JSON file? Pretty simple. Again, everything comes with a cost. If you are using pirated version of Excel, don't ask me. If you're using Office 365 or Excel, Microsoft Office 365 or 2016 and above versions, this facility is there. You go to your data. Please watch this carefully. You go to your data section. Under data, you have this get data. You hit on this get data. You can read the data from a file. And I'm saying, okay, read from a JSON file. And I'm just navigating and opening the JSON file. So today, the data exchange between the systems is very very good. So what you are seeing is okay. Let me again close the Excel and do it from, because this, I think the system settings were. So let me import the file, go to data, get data from file from JSON. You click on that, then this opens Power Query. And those who have been attending sessions of ours regularly, every time we have seen many Power Query sessions by now. So by now you understand Power Query is much powerful than a macros, and this is an M language, which M script, which the Microsoft has introduced. So it is connecting and it is trying to read the JSON data. And oh yeah, now this is better, beautiful to my eyes also. So the data has come and it said, okay, you have a GST number, B2B list is there. So I see, okay, what list is there? I can open and say, it says these are all records. So you can say, okay, what records? You can see each record is there as B2B, everything. And the point you are looking at is you want to have this records, the B2B or B2C records. You want this into an Excel file. So this data can be just converted into Excel file in one go. It loads the data and converts it into record. So this is a record system. You say convert into table. On the left side, you can see on the left side of the screen, it is saying that convert into table. I'll say yes, convert it into a table. And it is asking, is there any delimiter, anything? You say, I don't know. If you have any error, show the errors are errors. It automatically converted the data into table. You can now see this as records. And for someone of you are seeing for the first time, it might sound even more complicated. So it is showing the records, and the way the JSON structure is, it is like a nested. So automatically expand it to your newer rows. You convert everything into the columns. All the columns are loaded. Like you have list, right? Item 1, item 2, item 3, all the list is there. You can say you expand it. Now I have lot many, I think this is an 8 MB file, right? So you have all the data which is coming, and you can see all the values, columns, which is invoice number. You have the e-invoice data. All the information is available here. The item number and the item details. Even the item details, if you have sold multiple items, you have sold dal, sugar, whatever be the items that you have sold, all the information you can see. I'll only click one button called close and load to. So boom, that's all is actually required. That's all required for converting a JSON file into an Excel file. You don't need to find out whatever is. Now after coming this, you can make your change. This is column. You can just say column 1, you properly remove it. So you have the supplier name, supplier number, how many line items are there in it, what is the invoice line item value, invoice total, IRN, all the invoice number, all these values available, whether invoice is generated, not generated, it's just a click of a button. How many records? 9,000 records were there, 9,000 invoices in a month. It just got generated into one simple file, right? That is the power of automation. Just to repeat, I'll say go to data, get data from file, from JSON. Pick the JSON, boom, you're done. All right. The next thing which I want to discuss is preparing GSTR 9. Preparing GSTR 9. Today in the market, we have many tools. Every return filing software has a facility to prepare GSTR 9, like how GSTR 1 and 3B. Even when you log into the government portal, let me log into one login, and the values, whatever the values which Ashika and Jagadeesh have spoken, the values are also auto-populated available. I'm going to annual return GSTR 9, prepare it online. You can see some values which are filled. The table, respective tables, what the table sections which has been shown, your table 9 auto-filled. That means GSTR 9, when you download from the government portal, is auto-filled. People say that beautifully government has filled the values, so I can just go submit. Now, if it all the option was only to submit, then why at all you have to prepare R9? You still have to prepare R9. So here is one tool. This has been again designed in association with our GST, the technology partner. So Tally on Wheels is an audit analysis software where you can use the data of the tally. You can analyze the data of the tally. So I am here. I can select a thing. I can add, delete a company, and I have the tally data open here. I'll say add a company. Of course, there are multiple. Let me just do for one company, and I will say add company. It says, okay, there is something there you want to add it. I'll say yes, and the data is added. I'll say get 2021-22 data. Now, very beautifully, it will read the data from the tally and prepare all analysis report. And what are the type of analysis I want is, firstly, I want to get the GSTR 9 and 9C. Let me go back. So I want to prepare the GSTR 9 and 9C. Let me log in.
Welcome to Tally on Wheels, the best cloud-based audit automation tool.
Yeah. So let me go to so I select this company, whichever be the company which I want to process. I select the company, and
sir, the entity name is GST test.
It's in GST testing. Yeah, okay. All right. Yeah, so I select a company, and I log in for GST testing. Yeah, so the data is synced. I can actually view everything, but let me just what I'm more interested is to get the GSTR 9 and 9C preparation. So I'll click on GSTR 9 and 9C preparation for that. And it will ask me to log in to the portal using the OTP. I click on it. So very important, I have to enter the username of it. I'll say confirm. So I get an OTP, and let me get the OTP. So here is the OTP that is received 251725. So I'm logged in with the OTP and which is valid for 6 hours. And I click this and I say one thing, download data from the government portal. I say yes. You can see all my data which is relevant for filing my GSTR1 gets downloaded automatically. And you might be wondering why I am doing it. In a while you will understand. But my GSTR1, GSTR3B, GSTR9, GSTR table 8A, all the values which are relevant for preparing is downloaded automatically. Yeah. So as and when it is downloaded, you can see that system is becoming green. Once I download, so step 1, I got the data from the government portal. I want my purchases also. I want the data which is there here. I want my purchase register also, because I want to do reconciliation and get the input tax credit and table 14 bifurcation. So I will upload my purchase register. I will upload my purchase register into purchase register, which is from Tally, into the portal here. So I need an agent. Let me just download that. This is one small button which will. There's a one-time application which will help me to get the data from the, yeah. So I have downloaded this. Too many agents are running. Let me use it. Yeah. Let us close and open. Technology problems, you can always expect anything anytime. You go back, upload purchase register. Yeah, Azar, can you just check in the meantime why it is not, and if you can just upload it. Yeah, so it will automatically read the purchase register and will move on to prepare GSTR9. And the only thing you have to do is click on this important button where run GSTR9 matcher. Now, this will help you. This will actually help you to do the whole analysis. This is the key thing, if I have to say. This will do the whole analysis and prepare your data for GSTR9. And it will help you to download GSTR9 working for 2021-22. So let's do now. So let me download GSTR 9 workings. And the file is getting downloaded. Yeah. So the file is getting downloaded with lot of information in it. And let's see what are all the information that this file is carrying. And this file has all the information that is required for filing your GSTR 9. Let me just walk you through what the data it has. It has all the information which is required for filing. What do you need? If you look at it for filing, what is the information that you need? Let me zoom this file. You need to know what is the value which is there in your GSTR1. You can see the data in different color combination. The green color is in GSTR1, which is data downloaded from the government portal. There is one, the orange color, where some reconciliations which have been done. Then there is this color where you are ready for filing your GSTR 9, and there's some other reports which have been given. Let's walk through one by one. Firstly, you have GSTR 1, which has been taken from the government portal. It is summary. For the full period, you have the GSTR 1, what is the turnover is available. For the full period, you have your 3B. You have your 3B for the full period. And this value which is there, this is actually summarized from the government portal. That means if you have made any error, you have an opportunity to correct now. So how do I know if I have made any error? The errors could be in the reconciliation. The errors could be in reconciliation. I can see my summary view or a detailed view. I can see month over month, April, May, June, July. I can see a data month over month or a summary of it here. Likewise, even 3B, I can just see a total summary of it month over month. Now, what is more important is whether between these two, is it matching or not? Between my GSTR 1 and 3B, is it matching, or in any month there is a difference? So you can see in almost all the months it is matching, but in the month of June, July, some difference. So even before you proceed to file which is right, you need to know what data exists where. So knowing what information, what data is lying where is more important. So you have various reconciliations. Reconciliation, books versus 3B, R1 versus 3B, 2A versus 3B, or 2B versus 3B. You have claimed some credits in 3B. But in 2A, now right now you may ask why 2A, it should be 2B. There is a 2B versus 3B also. The 2A translated to month-wise data would mean this, because for you to match with your 8A, you need this reconciliation. So eventually you can see the value for the full year, what you have claimed is 17,53,000, while you are supposed to claim is 15,70,000. So some difference that exists, right? So there is a difference between 2A versus 2B versus 3B. And every place you have a home button to navigate back to the main thing. I just got the purchase register updated. So the purchase register from the tally will also come automatically. By vendor wise, you get the data pulled into the system, and you might have the purchases record either in journal. Some of you will record all some expenditure, repairs and maintenance in journal. So someone use purchase module, journal module, payment, whatever be the module you have used, you have some entries which is recorded along with the narration. You get the values automatically. This will help you to reconcile the expense reconciliation. This is what I said, the table 14 reporting. What is the value which is there in your ledger? And by the way, for you to analyze the RCM, my expenditure which is there in the books of accounts, let's say accounting charges is here, and the taxable amount which has been taken is less. So they have GST claimed, they have GST not claimed expenditure, all those things. So you can also look at the vouchers where the GST has not been claimed. List of vouchers where GST is not claimed will be available. List of vouchers where GST claimed is also available. So automatically you can just do a simple pivot of it. You can just do a simple pivot of it here. And I think by now we are all masters in putting any data. So you can just see my against this expenditure. People ask, how do I bifurcate between capital goods, purchases and input services? You can always see whether there is any difference. You see that the amount that was supposed to be claimed versus the amount that you have claimed, you have a grouping by expenditure, right? So this way you can also find that, okay, how did I classify what is my expenditure against each to be put into table 14 of GSTR 9C is available. After doing the reconciliations, so I have downloaded all the data. I have done the reconciliation. By the way, right now I didn't even start any work. Before I start the work, this much data is made available to me by the system. Now comes the GSTR 9 summary and the turnover computation and ITC computation. How did the summary has come? By now the system has indicated what should be my turnover. Like for this GST number, it said there is so much B2B, so much has been inward supplies RCM. Some amendments upward and downward I have done. System has automatically understood and prepared it. You may ask, how did this information come? I can just navigate to this button. It has looked at GSTR 1 by customer. So there is a sheet by customer it has prepared between B2B, B2C. It prepared that. And again, it said that so much is the turnover that you need to report. Then there is a value for people to do a data entry. So here is where this indicates that this section is for editing, where you start with what is the value that is there in your books of accounts. Let's say in my books of accounts, I have 8 crores. And this is divided into the turnover, the GST number 1, GST number 2, I'll say some 25 lakhs, some 35 lakhs. All that automatically you can see the segregation between the reporting turnover is changing. Then your adjustments that you need to do for the purpose of the sale of existence, because this is some of the information which you want to do. So there is some additions that you want to do, some subtractions that you want to do. You can start tracking it and preparing the turnover rate wise. So some of the information is auto-filled. The turnover which is there in your GSTR 3B. Let me zoom this for you. So if I need to know that is there any value that I have to report it in table 10 and table 11. If I have to report any value between table 10 and table 11. Now it has also brought forward the values that are already there in the last year. If I have paid anything through DRC 03, if I have adjusted something in the next year, now all those kind of reconciliations has been done and it has been reported and brought. If something is different, if something you have to match it and report, this reconciliation is auto fetched and auto done. And not just that, this also has an information of the trial balance. So you get at a view when I did a first time sync where the sync happened, it will also fetch you a trial balance for you to quickly cross verify the data. And you also have the reconciliation between the books and 2A. Currently the books data did not get synced fully. So the R1 value of the books is currently showing nil, but you also have the data, what is there in the books, what is there in the tally. All the reconciliations are done in one go. basically, this is a tool which will aid you. This is a tool which will aid you to prepare your GSTR 9. As I said, GSTR 9 is a holistic view of getting the data from books of accounts, getting the data from GSTR 1, what should be the turnover disclosed, getting the data from GSTR 3B. A combination of all the three has to be used for filing your returns. So this tool, again, just as you saw, a click of a buttons, it has downloaded all the information from the government portal. So again, this is a paid tool. You can just reach to Tally on Wheels. This is the so this is the application which we have used for downloading the data, and it's an online tool that you can subscribe. Basically, this as we are a knowledge partner and GST Zen is the technology partner. A combination of it, this has been prepared, and you can prepare multiple companies' data to sync and get it, and automatically fetch the information. Pretty simple to use, and entire data comes to you in an Excel file, and where all the values are linked. Like as I said in GSTR 9, if I say something has been taken as input tax credit, so the source of it from the how it has been taken, the respective values are linked. Everything has been computed and taken. Pretty simple, easily usable Excel, and it will also guide you how you have to prepare your GSTR 9 and 9C. Yes, as I said, I'll extend my time by another 10-15 minutes, and we are at 5:42. At this point, I will complete my session and walk you through. Any questions to anyone? If you have any questions, you can ask me. Oh, okay. I think participants. Yeah, you can unmute yourself if you have a question. Yeah, so some of you are messaging me that the presentation copy. Don't worry, you will get a feedback form. Please fill the feedback form. At the end of the feedback form, you also have a button to download the presentation. Yeah, sir, thank you. RPV user, you'll get a recording of it. Again, you'll get a feedback form. In that, you'll get the session recording and the session material. The link for the recorded session, you'll be getting it.
Hello.
Thank you, Umesh. I got it. Thank you, Anandi. I'll be here for another 2 minutes. If there are any questions which are not answered, we can take those questions.
Sir, this is Pinaki this side. Am I audible?
Yes, yes, you're audible. Yes, Pinaki.
Sir, I have a question that is regarding RCM.
Yes.
What I would like to know is whether RCM is applicable on shipping charges related to import of goods and the freight thereafter. RCM will be applicable on the freight part after the ship has entered the dock, and we will have to bring the goods from the dockyard to our warehouse, or that part is clear with me.
All the goods which are from your dockyard to goods moving to your location, it is you will be availing a GTA services you will be doing. If you are talking about an ocean freight, ocean freight, there are two things you have to look at it. If it is embedded in the invoice, so if you are doing a CAF contract and it is embedded, we have recent Mohit Mineral case, you can use it. But some of the people are unaware and they think that there is no GST on the ocean freight. I'll put it in this way: if you are talking to the shipping lines separately, which means
Okay.
you are paying to the vendor only the FOB value, and the shipping line you are again paying a separate amount. The GST would be attracted.
Okay.
Yeah.
Okay. Understood, sir. Thank you, sir.
Yes. All right, it's 5:45, and I thank each one of you for taking your time out and attending the session. Do attend our sessions regularly, and we'll continue to update you on the GST aspects and the technology aspects. And also, if you have any specific topic which you want to be covered, you can share it to us, write to us. We will address it in the upcoming session. Thank you, everyone. Good day.